everyone, I'm Angeline, mom of 3 and founder of Savvy Mama SG. Welcome to a Mama's Diary, where we talk honestly about motherhood, the struggles, the surprises, and everything in between. Today, we are diving into a topic that everyone thinks about: money. Because as much as we don't talk about it, money brings freedom, stability, and confidence. To help us figure out how, I'm joined by Dawn, SG Budget Babe, the finance mama who has helped thousands of readers become more savvy with money. We'll be talking about how to earn more, invest wisely, and ultimately achieve financial freedom. So let's start with something most of us can relate to: our mindset about money. So the first question I have for you is, everyone defines financial freedom differently. For some, it's a number. For others, it's a peace of mind or time with family. What does financial freedom mean for you? Is there a dollar amount?
Well, it's both. Financial freedom to me is a life where I don't have to make my life decisions based on money or a lack of it. So I grew up with that in my childhood, and I was very determined that I wanted money to be the last thing that I needed to consider in making a decision. So that's what financial freedom means. And if we had to pin that to a number, everyone's number is different. So it's actually a concept that I talk about in my book. You read it, right? I taught you how to calculate your number. So for me, that number used to be 1 million. And that was when I was in my 20s. I hadn't yet gotten married. I hadn't yet become a parent. After becoming a mom of 2, and yours is probably going to be higher than mine because you're mom of 3. So after becoming a mom, I realized that I had grossly underestimated how much I would be spending on my dependents, because I don't just have the 2 young kids to take care of, I also have to support the elderly. So as a result of that, my number has now shifted, and that number is now 2 million. So why 2 million? That's because once I've hit that amount, I know that I can very, very comfortably get at least 100,000 a year in passive income. So then that's going to be a level of lifestyle that's comfortable for everyone, for my family and me, to take care of everyone and all our needs without having to stress so much. And that is why that's the next number that I'm working to. So I hit 1 million last year, and now I'm working towards the next 1M.
But definitely you hit that faster than the first 1 million you hit.
Yes, I took 10 years to hit the first 1 million. And I'm very sure that the second one will be shorter because of this thing called compounding.
A lot of people hear the word investing and immediately think it's only for the rich. What exactly do you mean by investing?
So it's a misconception. It's not just for the rich. In fact, everyone should learn and must learn how to invest if you want to beat inflation. Otherwise, you just need to keep earning more money and keep saving aggressively while cutting down expenses, which is not the most sustainable in the long run if your income isn't going to steadily increase. And if we were to be very realistic about it, with AI coming for a lot of jobs, when we get closer to the tail end of our careers, we're not going to be able to command as much as we probably did when we were younger and more energetic. So what exactly is the definition of investing? If I were to keep it very simple, I would say it is simply making your money work for you, even when you're not.
I like the idea. Okay, then I think I myself included, like many women, they won't hesitate to buy like 10 pairs of shoes or splurge on a luxury material bag like a Chanel bag or something like that, but they don't think about investing. Why do you think that is so?
It's really a matter of priorities. So I don't judge what people choose to spend on, because I too have my own weak spots. I probably spend too much on certain things that other people would disagree with. But at the end of the day, it's what we prioritize and value. So for me, I value financial freedom. And if I were to spend it on branded items right now, I know that I'm actually giving a lot up later on in order to afford this item right now. It's very normal though, because it's human nature, right? Short-term gratification, we just want to get it now, it makes us happy, but how long does that happiness really last? And if you go and read up more about the hedonic treadmill of happiness, consumerism and material goods is not really the solution. I also think of it as, how many hours of my time does it cost me if I actually buy this branded item? And when it crosses a certain threshold, I realize, no, I'm not willing to work, say, 100 hours just for a bag. I would cap it at, say, 3 hours, 5 hours, but no handbag, branded or not, is worth 100 hours of my life anymore.
But I guess it's the status that it brings. Like, you know, being able to afford to bring that bag out to match your outfit. Right.
So if that is a lifestyle and validation that some people need, then they will just need to plan for that, right? So if you need and you are willing to spend to buy that kind of status and validation, then you have to find other ways to earn the money so that you can do that. And I would say that instead of trying to deprive yourself of everything that you want, another good rule of thumb is you can set for yourself an X amount before you buy something. So let's say if you really, really want that branded item, instead of spending immediately on it when you get your paycheck, what about telling yourself, well, I need financial security at the same time? If I have $0 in my bank, but I have a nice handbag that no one wants to buy, when I need money to pay for my relative's hospitalization bill, I'm going to be in trouble. So in order to not land in that situation, what's going to be more embarrassing? That you don't have a branded handbag to bring along and show people, or that you do have one, but you cannot pay for your own family's bills? I think that is actually more scary. So if people start to think about this and they agree, then they want to value both. One way is you could say, let me have 5x or 10x of what it costs in my bank first or in my investments, then I'll buy that. Then
So
you
it's
know
very
you're not
disciplined.
eating too much. Yes, correct.
Very
You're still
disciplined.
disciplined and you're getting the best of both worlds.
Right.
Plus, another good thing I realized is the longer you take to think about something, you really start questioning whether you
You really want
need
it.
Yeah, exactly.
Okay. That's very, very good advice. So I think the next question that I have is, what would you say to someone who tells you, I would love to invest, but I don't have extra money?
So I would say, how often do you eat out? How many cups of coffee do you buy from Starbucks or a bubble tea shop or your favorite tea brand? What is your weakness? Maybe mine is chocolate, right? How much do you spend on chocolates every month? Stuff like that. Or how much do you spend on Netflix? Is Netflix making you richer? So when you really start to look at a person's spending, you realize it is not that they don't have money to invest, but that they don't prioritize it. So if they learn how to prioritize it enough, then you can definitely unlock money to invest, because the truth is investing has become very democratized. When I first started out, minimum lot sizes were a lot bigger. You needed a lot of money if you wanted to invest. Today, thanks to the advent of fractional shares and regular share saving plans by the different brokerages, you could invest as little as, say, $50 a month, every month.
So that's all we need to start investing,
Yeah.
actually.
Just $50. So it's not true that they don't have money to invest. You just need to figure out what you're willing to give up in order to start. So which is actually more important.
Okay, so everybody has $50 to start investing today.
For sure.
With the cost of everything rising, let's talk about how moms can actually earn more, not just save more. Because I think at some point, at one point I was thinking, okay, how can I save more? But then it actually also makes me very, very miserable to do that. So what are some practical ways a mom can start earning extra income, even with the very limited time we have?
It's funny you say that because I went through this same discovery on my blog. So I've been blogging since 2014, right? And I've been blogging since 2014, right? And my first viral article was where I saved 20,000 in a year. So then after that, I challenged myself and I was like, can I save even more the next year? But it got to the point where I got really miserable. And I realized that is not financial freedom. Like, I don't want to be so depriving myself of so many things in the moment either, just for a future. I need to strike a good balance, right? And I think that was probably in the second or third year. So I shared this same revelation in my blog. A lot of my readers who saw me grow up in the public eye like that, they saw that change in me. I realized that I had to earn more. Because when we cut, there's only a max floor that we can hit. But when we earn more, the ceiling is limitless, right? So as a mom, what you could do is to think about what you're good at, what you could help out in, and see if those are skills or areas or services that can actually be monetized. And just create a side hustle. It can be as simple as, for example, if you know that your neighbor has dogs to walk, and they're very busy, they don't have time to walk the dog, and they're getting very triggered all the time, or they're always distracted. It could be as simple as you offering to walk their dogs for them and bring your kids along with it. So you could make a family activity out of them, and your kids get to play with someone's dog, and you just charge them like a fee for doing it. And for all you know, they might keep using you for that service, right? Or maybe even something as simple as, say, picking up other people's kids for them, because parents are working. And a lot of us, we're rushing back to pick up our kids before the 7 p.m. Otherwise, you pay a fine to the school, right? Instead of having to pay a fine to the school, I'm sure some parents might be willing to actually pay for another trusted parent to pick up their kid for them.
Babysit them also.
Yes, correct. So if you have like neighbors or friends who are in that area who could benefit from this service, even offering is not a bad idea. The worst that they could say is no. But the moment you start offering and let people know that this is something that you can help with in exchange for some fees, there will be people who are willing to take it up. So these are various side hustle ideas that you can think of. But everyone has different skills, and what they're good at doing can be very different. So think about that and then figure out how can you turn that into a profitable side hustle.
Right, okay. How about what's one mistake you often see people make when they try to make money fast?
They either fall for scams, job scams, or if they try and make money through investing, then they fall for a lot of investment scams or high fee products and get rich quick schemes. So the reality is, get rich quick is not the best route. Everyone wants it, but it's really, really not the best and most sustainable route. The more valuable part is the process. So getting rich slowly and steadily is actually more valuable, because the skills and habits that we cultivate on that journey is what is going to stay with us for life, and that's where it will then exponentially grow.
Right, okay. Many people think it's uncool to plan for retirement, you mentioned in your book, and then they prefer to just YOLO and splurge on like material goods, holidays, but the future will thank you for starting early, and like you listen to SG Project Big and start investing like today. So if a mom or anyone who has never invested before, where should we start? Like, what would make sense? Like, is it like Singapore markets, which is like pretty stagnant, or US? And how much as a percentage of income would you say is a good amount to set aside each month?
So that's the first and most common question I always get, right? What should I buy?
Yes.
But that is not the right question. For someone who is new or who has yet to get started, the correct question you should be asking is more reflective and one that is more retrospective. You need to sit down and understand first, how does investing work? What are the different options on the table? And you don't have to go deep dive into all of the options, but you at least need to know enough to understand how each of the different options work and what are the trade-offs. From there, then you will more or less know where you gravitate towards.
So it depends on the risk profile for everybody. Like,
correct.
If you are in, like, let's say our age, like 30 plus, you'll be like medium risk.
It may not be age dependent. I've seen people who are older and very aggressive. I've seen people who are younger and very risk adverse. So it's not just an age, it's not just a number. It's also sometimes your lifestyle. How many dependents are counting on you? You could be someone in your late 20s, but you are the single breadwinner in your family. Your parents are disabled, can't work. You have an autistic sibling to take care of. That's a lot of burden. You're literally carrying something that people carry later on in their lives. So it doesn't matter that you're in your 20s. Your risk profile is not going to be aggressive. You will be very risk adverse because there's a lot of lives depending on your income. So people actually need to sit down and understand that first. Then once they understand the landscape, different options, how it works, where their own risk profile fits in, their investment objectives and horizons also play a part. Because if you have a much longer time frame and horizon, then you can afford to take on things that are a bit further out, right? But if your time frame is very short, you will end up making very different decisions. And only after you've gone through those different processes, then it is the, what should I buy? So is this the Singapore market? Is it the US market? Is it the Hong Kong markets? The truth is they all have different trade-offs. I'll use Singapore as an example. I started out with the Singapore markets because I learned about this concept called circle of competency and scatterbutt research. So I'm huge on that. And as a formerly trained, I used to study journalism. So in school, we are trained to really go to do on-ground research and talk to people, right? And you can't really research a lot of US stocks here in Singapore. Now we can, like, if you look at the big names, okay? But if you want to look at the smaller mid caps, it's really hard. But in Singapore, if I want to look at, let's say, DBS Bank, I can go into any branch and figure out things, right? If I want to look at a real estate investment trust for shopping malls, I can just visit the shopping mall and see if it is crowded, how many empty shops are there, what is the tenant profile like, and figure out and understand the
The
business.
due diligence
Yes,
of
the
every
on-ground.
single stock you buy.
Exactly. So I can actually do that easier. So that was within my circle of competence, right? But then people then said that, oh, Singapore market is very flat, it's not going anywhere. Well, look at where it is. The Straits Times Index has just hit its all-time record high. So it's not true, right? A lot of times people are held back by their mindset. But it is more about, do you understand enough to invest? Because now what I'm seeing on social media is everyone is very bullish on the US markets.
Yeah.
But what did we see? For the first time in 40 years, the USD has actually dropped. So while the headline return seems really good, if you actually invested in the US stock markets as of this year, 2025, you are not making the amount that the Americans are making because the Sing dollar strengthened against the USD and it depreciated, right? Or like China, for example, Hong Kong, the same story applied. So should a mom start with which market? My question back to the mom is, do you understand how to invest? Have you gone through at least a basic learning, basic course or something to get you up to speed? Do you know enough about yourself and your risk profile and where you want to be and where you want to get to? And if you ask me about these three markets, where are you more confident in? Which market do you actually understand? So if someone says, oh, I heard and saw on social media, on Reddit, that I should invest in the S&P 500 because people say you won't go wrong. I'm like, okay, won't go wrong, huh? Did you know about the USD depreciation?
Yeah.
Did you ever factor that? Did you even know that FX currency exchange rate
It's also
is a thing in your portfolio, which obviously you're not going to learn about from social media if your source of that information is from the US people.
right. So then, for someone who is new and really want to start, would you think it would make sense to start from like Singapore, like blue chip stock, like maybe like the Singapore Airlines, the DBS, the STI, and like just set aside money that you don't need? Would that be a good place to start?
I think it is an easy place to start. Whether it is good will depend on what
the
is
good
your
is relative.
definition.
Yeah, like it won't be like crazy returns, but still better than putting the money in the bank.
Then I would think so, because a lot of times the bank returns are just
0.2%.
even if you talk about your fixed deposit, it's also too low. Whereas equities have done really well and should likely continue to go up. Because if you think about it, right, we have this thing called inflation.
Yes.
Businesses actually do better with inflation because the cost of the things that they sell also go up. So the businesses that are able to control their costs and maintain their profit or increase their profit margins from that, they are the ones who will continue to grow over time and grow bigger. That's why you see so that's why we see like some companies do really well, right? Because they do have that pricing power. Look at Apple.
Yes, Apple.
I still remember when the iPhone was first out, it was not that expensive, and now the latest one is almost what, $2,000.
But would you recommend buying Apple shares? Because I feel like after Steve Jobs is not around, they haven't really had new products. It's just the same. Like there's no like, like there was iPhone, then there was iPad, then the EarPods, but there's no new product. It's just like extension of like the next iPhone. So I'm not sure how the growth trajectory will be, but of course the branding is there. It's still strong.
So then to that question, based on what you've just said, I would already recommend that you need to first understand more about Apple. Yeah, because I see a lot of gaps there, and whenever someone asks those kind of questions, and from the way they explain, so when I have a bit more time, and someone asks me like, Dawn, do you think I should buy stock A, B, C now, right? Sometimes I don't have time, so I'll just like, sorry, I can't give you financial advice. But if I have time to actually sit down with a person or like DM and do audio notes and explain to them a bit more, it's usually that process of understanding what do you even know, what is the gap, and you can buy any stock, but what are you in for? Like if you are into something that's very safe and you think this company will still be around, so you're of the belief that the iPhone will always still be around and Apple will not die, then in this case, buying Apple stock could be a decent idea. But if you are someone who wants multi-bagger returns, you want to 2x your money, 5x that money, and you need to achieve this in the next, say, 5 years, then my question is, so what makes you think that Apple can get there in the next 5 years? Does that hit your objective? So you see this simple question of, should I buy Apple stock now? Has so many varying answers for everyone. Because maybe person
Depends on
A,
expectations.
yes, what is your expectation? What is your return? What is your time horizon? And that is what you need to figure out for yourself. No one can do it for you.
So that's why the first step you said is to really sit down and think about what and how much you want to grow your money by.
Correct. So I would say first step is getting back in control of your money. You need to understand how your money works, what you want to achieve with it, and then take back control for that. Then you execute. But people always just think of execute, but they don't even know when they execute, what are you executing for?
That's a good point. Because actually we just want, for us, our investment strategy is really we want to have multi-baggers for equities. But I'm thinking whether like the next line of defense will be to build like dividends and all those things. But just a dividend stock itself, yes, they pay dividends, but not just the dividends part, which they pay yearly, whether they pay more or less, it depends on the profits, but also the share price, will it hold? And that's not good enough, right? You want it to appreciate as well. So that's why that level of the security dividend income is something that I find it hard to build as of now.
I would say also knowledge gaps are very important to fill if you want to get better as an investor. So I'll give you an example. On social media now, and there's a lot of literature out there that says dividend stocks will not be multi-baggers.
Yes.
You've seen those, right? But is that true? Do you subscribe to that belief? Generally.
When I try to do that, I want to find something that can give me dividends but also appreciation. So that's why it makes me feel like, okay, I should really look at enter only when the price is okay.
And if
right
you
now,
think about it theoretically, it is also true that if a company is giving out its profits or a portion of its profits as dividends to shareholders, it means they're not retaining that money for their own growth and reinvesting it.
yes.
Right. So then the odds of them becoming a multi-bagger are also lesser than companies who aggressively keep it and invest to innovate and R&D and don't pay dividends to shareholders.
Yes.
But if you subscribe to all these general statements, then it's also where you will very barely outperform the market. Because I can name you a lot of dividend stocks that have become a multi-bagger. And the one that everyone probably knows, DBS.
Yes,
DBS, I remember I bought below $14.
No, it's
And
30,
now it's
40,
53.
50. Oh my god.
It has been a multi-bagger for me, and it has been a very steady dividend stock as well. So is it really true that dividend stocks can't be multi-baggers? No.
But right now, you just need to find whether. But right now, the market is so high now. You can't really find like. Okay lah, but we wouldn't really know like for now. The price now, like, and 10 years later, everything is cheap now if you buy now versus 10 years later, right?
Yeah, so I explained this also to a lot of my friends and students before. What you see is as today's high could be tomorrow's low. But the important thing is, will that tomorrow come? Because if you're talking about individual stocks, the company could be an all-time high today, but it may not survive till tomorrow. Right? Or it may survive, but then it will be flat for a really long time. And there's a lot of like big American stalwarts that used to be huge in their heydays, and we all know where they are right now. They've not made much money for shareholders over the years. But on the other hand, if you are actually investing into something that tracks the index, so the blue chip investment plan or the Straits Times index, for example, this tracks Singapore's top 30 companies. If let's say 3 of them don't do well, they get kicked out and replaced with something else. So the index is always there. It's an auto-correcting thing, and that tomorrow will always be relevant for the index.
It's just that the returns will not be a multi-bagger kind of return, but it's still safe.
Well, it also depends on when you enter, isn't it? Because every stock can be a good stock at the right price. And a good stock can be a bad investment if you overpay for it.
Right.
Especially if you pay so much so that there will not be any future buyers who will pay that much of a premium as well for that same stock that you own.
So what are some of the metrics you use to assess whether it's a right price or not?
That's a whole other
other
course
USP,
already. Yeah, I do a lot of stuff. It also depends on which company, which industry. So there's so many factors. It's not just a one
Earnings per share.
thing answer.
You
There's
look
a
at
lot
everything.
of things. Yeah, like there are some companies that are loss making. PE is negative.
Yes.
But I have still invested because something else was a green flag.
Like
So
you're investing a lot.
there was other metrics that made that company a good one, and I knew that it was just a matter of time before that turn. So there's no one simple answer. So I think everyone keeps trying to search for that simple answer. Just teach me what I need to do to be able
Tell me
to
what to buy now.
Yeah, but I can't because like I don't know your risk.
Right.
I don't know your amount. I don't know your holding power. Yeah, and you can even copy people, but you may not be exactly copying every single move, right? And then you wonder why you mess it all up. So the only person who can actually excel at that is you. That's why you need to take that control.
Right, okay. So then, many banks offer automatic investment plans like the blue chip investment plan. So how it works is that every month you just set aside like maybe $500 per month, and then they will just buy some of the stocks, like some of the blue chip stocks every month. Do you think that's a good strategy to do? Because it's like there's no time for people who have no time to monitor the markets like every day or every month.
It's not just the banks who have that. Even a lot of the brokerages now have this thing called RSP or RSS, which is regular share savings or regular shares investment plan. It goes by different names, right? Yeah, they're all the same thing. So I guess back to my earlier point, is it a good idea to buy and invest in this? It's what do you want? What are you trying to achieve, right? Like if you know you have no time and you want to invest, you want to make sure your money is investing and your benchmark is to beat more than whatever the bank is paying you in that low yield savings account.
Yeah, so
Then-
it's like forced savings. It's actually a good forced savings, right? If you look at it that way.
It could be, but it also, you must make sure that you're in a market or in a plan that is likely to be positive in the long run, right? Because in the short run, many things can happen. But in the long run, like, is that fundamentally strong enough to go up? That is the question that you need to answer.
Okay, so this versus like investment plan from the insurance agent, which would you recommend?
So personally, I don't invest through insurers because the fees are just too high. And in investing, the number one thing that we try to do is always to keep our fees low so that your upside can be higher.
Right.
Yeah. But if you are willing to pay that fee and you are very certain that paying that fee will lead to outperformance for you because you have faith in your insurance agent friend or the insurer or whatever it is, you have faith that that is going to be better than the other alternative for you, then it could work for some people. But at the end of the day, the question is, what is the other alternative as well? Right? So for me, it's a no-go because between investing through an insurer and my DIY investing, my last 10 years, I've seen my own track record.
Better than the insurance.
I would not have, let's just say I wouldn't have hit 1 million if I invested through an insurer.
Right.
Right? And I've not seen any of my friends actually achieve that. Yeah. So don't talk about high income earners because I was not high income earner when I went on this journey, and my finances are very much documented on the blog for people to see the last 10 years of my growth.
I saw it's
right?
actually a very common income that most
Yeah.
quite a lot of Singaporeans have.
Exactly. I would say it's median. Right? And no, actually below median, because median is a bit skewed by the super high earners as well. It's very average. But with that, I was able to slowly and steadily increase. I would not have been able to achieve that on an ILP because an ILP would not have given me the kind of multi-bagger return that I enjoyed with some stocks over the years that helped the portfolio, etc. Right? So because my other alternative is DIY investing and I am actually okay with that, it makes no sense for me to incur higher fees for a performance that I am not so certain will actually outperform my own and take away control from myself because I wouldn't have as much visibility and transparency. Whereas if someone's alternative is just leave it in the bank, well, then maybe even investing in an ILP is better than nothing because the benchmark to supersede is just so low.
Yeah. So what would you say is a good start for like the simplest, low stress, wouldn't lose money kind of investment that any mom can do? Is that like ETF or like the forced savings that we talk about through the brokerage like a forced safe shares kind of plan, or what would you think?
In investing, there's no such thing as wouldn't lose money for sure. Because the risk element is what you take on in exchange for the higher return. So if you want 100% won't lose money, then that is your guaranteed stuff, which is your fixed deposits and your government bonds, right? So
Which is
if
very,
your
very low,
threshold,
like 3-4%.
yeah, if your threshold is the bank interest at 0.05%, then sure, this already beats these. So then, yeah, you could consider that an investment. But to me, I wouldn't, because for me, my threshold of investing is it must be inflation criteria number one. And then criteria number two, over the years, as I got better at it, I've raised my percentage expectations for myself to double digits. So if something doesn't make me at least double digit, I'm not going to be putting my money in there.
Right. Okay, but then we are not done. We don't know.
But I would say that's the thing. People feel that it's so difficult.
Right.
But I'm not I didn't learn finance. I didn't work on Wall Street or in the bank or
You
in
don't need a
finance.
finance degree to do this.
Exactly. You don't need a finance degree. You just need to be able to learn. And how did I learn? In the beginning, it was through reading a lot of books. Back then, YouTube did not exist to the extent that it did now, right? But I read a lot of books. I went for courses, and then you learn from the market. You pay tuition fees to the market when you make mistakes. And that teaches you something about yourself that you are like, I'm never going to make this mistake again. Yeah. So all of these combined is what got me better and better over the years. But I think the biggest challenge for people is that they don't start, they don't learn. Or they just buy something, they execute without knowing the how and what and why. And that is where the gap really is. So to actually address this problem, I created a 7-day challenge that is designed specifically for beginners. And I did it because I had so many friends who were just like, don't I just buy you lunch and you teach me?
Yeah.
And I realized that, but this investing is not really something that I can teach you in one lunch. Like I could spend the first lunch asking you all those questions to make you think back about yourself, find your answers. I can guide you towards the answers, right? Then after that, I still need to have another lunch to teach you about the different instruments. Then you need to have another lunch to teach you about portfolio management and allocation. And then you might be like, I don't know which button to press. So maybe another lunch to teach you the demonstration and all that stuff. And I figured out I don't have that much time to meet with every one of my friends multiple times for so many lunches just to teach them. But I can design something that is like that. So based on that idea, I created a 7-day challenge, which is like the equivalent of you buying me a meal every day for 7 days to learn this in a structured manner that will actually take them to action at the end of it. So the idea there is that after you finish 7 days of challenge, it doesn't have to be consecutive days. 7 days later, you will be able to take action, actually have your own portfolio. And the best part is, it's your own. You don't pay me fees to invest for you. You don't pay me recurring portfolio fees. All of that is now in your control. The only thing you paid for is less than $200 to learn in 7 days about how everything works and create something for yourself. So that is where I think people need to bridge that first gap. And then from there, it's actually very possible to achieve inflation beating returns.
But I guess a lot is also your time to go and invest in these tuition fees, because like every brokerage has different interface. Like I also struggle a lot, like how to claim like the fees, like the free shares even from podiums. I'm still figuring that out. Yeah. So at the end of the day, I guess like at the end of the day, it's not just about making money. It's also, as moms, creating that freedom and balance for our families, being able to be there for our child when they need us immediately without having to ask your boss, hey, I need to go pick up my kid, or like just having to explain why you need to be away.
Yes, exactly. And that is the real financial freedom.
Yeah.
Right? And that's the real flex. To me, that is far more valuable than being able to carry a branded bag.
Yeah. But also like this, being able to do this also comes at a big cost of not being able to do other things. So it's something that is very difficult to strike a balance.
Which is why I think it all boils down to the idea of resources. Life is just life, our finances, our time, our energy, our emotions. It's all just about resource allocation, right? It is, you say that comes at the cost of not being able to do something else. The same way whereby we're filming this right now, we had a very long lunch, we had a good chat, and that time could have actually been spent doing something else. I could have been using that time to trade. I could have been using that time to teach someone else, or I could have been using that time to teach a corporate workshop and actually earn money. But I chose to do this. So we allocate our time, energy, and everything already as it is. Why are we not doing that for our money?
Yeah. Okay, so I read your book cover to cover. This is like the only book I read this year, other than all the other kids' books. Okay, so you mentioned in your book that no amount of money can make up for lost time with your kids. So how do you balance your financial goals with family time? Is there like special time that you set aside that you block out with your family over like something else that makes money?
So I think the thing that people get wrong about chasing financial freedom is that it doesn't really take up that much time, to be honest. Your plan and strategy matters more than the time. And you these days in investing, you can even automate it. So I have quite a few friends where they put their investing on autopilot
Right.
and they just are full on with their kids and family. Yeah, so how do I strike a balance? I don't really need to. It's very natural. When I'm with my kids, I don't obsess over investing and I don't need to. I don't check the markets as often as many people think I do. I have been making more than the market returns, but to be fair, I should also caveat that when the market goes down, my portfolio goes down more than what the market goes down. So it's always above and beyond, right? And you can track this on my blog for the last few years. Whenever there's a market crash, I do worse than the market crash. When the market is high, I do even better than whatever the market is doing. So it's always outperformance in the negatives as well, right? But the key thing is that even with this outperformance, I don't check obsessively. Sometimes I don't even know when a share price moves until someone like DMs me about it.
Like alert,
Only
right?
for certain things, not everything. Yeah, so like sometimes people tell me, then I realize, oh, it moved. There's a crash. I didn't even know. I didn't even realize. Or if there is a major, like it's all over the news. Yeah, but I don't track obsessively. Maybe opening up my brokerage account like max once a month. No, I would say once a month is normal. Sometimes once a week. I don't open every day.
I thought you would be looking at every day.
Not at all.
Oh, okay.
That's why I didn't even know the exact date that my portfolio crossed 1 million. I wasn't even tracking until I did my year-end review, which I do every year. Then I realized, oh, when did I cross 1 million?
Wow, okay. If you could give every mom listening one piece of financial advice that would change your own life, what would it be? Just
I'll
one
say
thing.
two.
Okay, two.
Okay, the first one is the mindset, then the other one is the action.
Mindset and action.
Okay, so I clarify first. The mindset thing that changed my life is realizing that the later I start, the more difficult and more money it will cost me. So when I start earlier, I actually use less money to get to the same outcome.
But how early is early?
It's up to
Now.
you. As early as yesterday.
Yeah.
And if yesterday you didn't do it today. If today you can't do it tomorrow. Don't do it next year. Don't do it 5 years later. Don't do it 10 years later. The longer you procrastinate, the more it's actually going to cost you in terms of the actual amount.
Because
you
of
need to
compound
put.
interest.
Yes, correct. And that is the execution part, right? That's the action part. So the mindset thing that really changed it for me was when I realized that you can actually beat the professionals. The average retail investor can beat the professionals because we have one thing that they don't.
What is
Time and control.
But they have so many people looking at the markets every day.
But it doesn't matter. And yet, they still do not outperform a lot of average, I would say, retail investors who are in control. Because when you are a professional, you are bound by a lot of other things that you don't have control over. I'll give you an example. As me managing my own money, when there is a market crash, I'm very calm and I can buy more. I don't have to deal with clients, like unlike my friends who are managing a fund, where they're calling, hey, why is my money down? Hey, I need money now. What do you mean I can only get back 50%? Oh, sorry, it's because the market crashed. Please do not liquidate now. We actually need to be buying more at this point. No, you've already lost 50% of my money. How can I trust that you're actually good at what you think you do? Give me my money back. Even if it's at the loss now, this will be really bad. Yes, just give, there's so much management. But I don't have to do any of that when the markets crashed in April this year.
You don't feel like...
I did. I have to be very honest. I feel the same emotions as everyone does. But because I have breached that knowledge gap, I use that to weigh with my emotions and ask myself, which brain am I letting myself take control right now? So I have a graphic editor can put in here.
Okay.
I have this graphic I put out on my Instagram that shows which brain are you letting make the decisions.
Right.
Everyone feels the same emotions. It's not possible to not feel fear when the markets crash. But you feel less of that fear. It's just like if someone makes fun of you and you're on stage. Some people get really traumatized by that experience. But someone who has been doing that for a long time, it's all bad. You know, you still feel it, you still feel the embarrassment, but it's not as damaging and traumatic anymore. So that is where I will weigh and I'll ask myself, is this fear logical or am I just being emotional? And I was able to extract myself from that and be very calm and logical about it. And I deployed a lot of money in April when the markets crashed, and I didn't have to account to anyone about it.
Because you're confident
Yes,
that you will go back up, and it did.
And that is the thing that people need to realize, that you have control. The professionals don't.
Embarrassment is the price to entry.
Yes, that's what Steven Butler said.
Yes. Yeah, so I think that's why when the market crashed, we didn't buy like more P. We just when it crashed, we just didn't do anything. Like for a long time, we didn't do anything. When the markets crashed, we just
The best thing was not to, actually it was better that you did not do anything versus if you had panic sold.
we didn't sell, but we didn't buy more.
Because I know of people who panic sold. They thought that this was it, the bubble had popped, the recession was coming, they panic sold. And
That's the worst mistake, right?
yes, later on they regretted because the bounce ended up being so much higher than what they entered in. Yeah. So if you've ever felt stuck and you have ever told yourself you're starting investing, you still don't know how, then start. That's the key thing. Start learning. And I hope the questions in today's episode actually helps people to think about how to invest for themselves and then go and bridge that knowledge gap. Whether if you have a lot of time on your hand, then I think reading books are a great place to start because you can borrow for free.
Her blog post.
My blog post, I have over 800 blog posts by now.
800?
So if you can actually get through the 800, you can learn a lot of things from me for free on my blog. But if you don't have the time for it, then I would say go for a crash course that will get you up to speed. That's why I designed the 7-day crash course. But for someone who does not have even like less than $200 to spare, it's a money or time thing. Right? That's literally the story of all of our lives.
Yeah.
So if you have the time, go and learn. There's so much free resources out there. You don't have the time, go for shortcuts and make sure you find those that will really get you up to speed and then execute and take action. That's a key thing.
Mindset and action.
Yes.
Okay, so I think that's very, very insightful. Thank you so much, Dawn, for being so generous with your wisdom and encouraging everyone to take the first step into investing. Time really is your best ally. To everyone listening, investing is not scary. You don't need a finance degree. You don't need to have a lot of money to start. You just need to take action and just start, like putting in that first $50. Nobody else cares more about your money than you. Take back control of your money and your time. And if you'd like to learn more for SG Budget Babe, go read her book, look at her courses and her blog, sgbudgetbabe.com. She shares a lot of practical tips for everyday Singaporeans like you and me to grow their wealth confidently. If you found today's episode helpful, share it with another mom who needs this reminder and follow A Mama's Diary for more conversations with experts who truly understand what we go through. Until next time, I'm Angeline and this is Dawn, and here's to navigating motherhood and money together. Thank you.